of a nice paid vacation to spend when he was born. That's how I specifically remember. I only lasted at Wells Fargo for a year, and then at that point, 1 year later, I transitioned into my first investment education / trading coaching gig. So it is like exactly 20 years right now. Anyways, very momentous occasion. For me, you guys are probably like, I don't care, get moving. Here's the disclosures. It's been a lot of years, John. It's been a lot of years. Here, let's get into the market. If I could get out of these slides. Hey, I'm bullish. Been bullish for a while. The market bullish. It's been bullish. I mean, come on, right? We've had, if you remember, we had that one that we got bullish fairly consistently back in early March. And then we had a couple of decent months. And then we had just a little hiccup right around the second week of May. If you remember, that was the debt ceiling. And it was like, oh, here we go again. And we thought, oh, they're going to drag it out. And all of a sudden it was like solved, voted on 3 days before the quote unquote deadline that kept getting kicked down the road a little bit. And not only was it solved, but it was solved for like multi-year. It's like, hey, we don't have to do this again next year. I think it's good for 2, maybe 3 years, the deal that they put in place. And that was it. That was the catalyst. We got that in place, and I went from slightly bullish to straight bullish, where I've been for the past 2 months. And in that 2 months, we've had, I would say, 4 solid windows of entry, of trading windows. 4. I mean, if you look back at what we had to suffer through in 2022 in that bear market and what we've had as an alternative this year, my number, oh, John, you and me are spot on, bro. Bam, July 16th, 5.5, baby. That is my number right there. The highest it's been. I mean, it jumped again. So I can kind of trace this back. I've been doing a better job. I keep this on a different computer, but I've been keeping this. So you can see even in April, 3, 2.5, 275. And then even when I dropped, I never dropped below like the bullish end of neutral. This is why I think this is such an important routine on like as a weekend routine, where we just keep a consistent and vigilant eye on market conditions so that we can, assess it and say, all right, is it changing? Is it what it should be? As it's gotten better, so you can kind of see in May, we jumped 2.5 and then I jumped to 4. And at this point, by early June, not only am I still trading bullishly, but I am increasingly bullish. So more trades, bigger trades for these last few windows. But that's where I am now. I'm 5.5. Everything's bullish. There's still room for short term to get better. There's still room. The volume, I think, is going to continue. I think volume may drop on down to 0. But as that happens, so here's what's interesting is you'll notice that volumes drop from 7.5 to 0.25, but the scores increased from 5 to 5.5. I think that's a great illustration as to why I say I don't need volume once we're in established trends. People are like, oh, well, the volume's not at 125%. 125%? For what? This isn't a breakout. We're not breaking out. This is a well-established trend. We can move forward and higher on nothing other than momentum. So where can I get more info on this? Randall, you mean this routine, this process right here? Is that what you mean? I'll tell you exactly. Yes. Fabulous question. We don't go here much anymore, but back in the day, there used to be a little event called, oh shit, I can't remember what it's called. Let's go to the event record. I don't even remember what it's called. Active Investor Workshop. We did an active, you can see we kind of stopped doing them. I don't know if it was it was just like the time, or we weren't getting the attendance. I loved them. I loved doing these. We used to do them on Tuesday afternoons. Then we went to every other week, and then we just kind of shut them down. But for example, if you talk about hedging, that's the last one we did. It was hedging, modern portfolio protection, hedging using VIX options. Weekly versus monthly, butterflies, creating income with spreads. Oh, nope. This is where it is. It's hidden. It's hidden. This is not weekly versus monthly options. April 26, 2022. You'll see here, this is actually about market posture. So in that 1 hour workshop there, I go through this process, right? What is it? How do we score it? How do we assess it? How do we come up with it? What do we do with it? Et cetera, et cetera, et cetera. So what I would say is go ahead and pop on in to the, again, where to find it is event recordings, active investor workshop, April 26th. After that, look around. There's other good stuff in there. There's some cool things. They're just, we'd have a topic and we'd just pull it up, and I just kind of shoot from the hip and go through it. It was a lot of fun, actually. So I do miss them. Okay, let's go back. Sorry, great question. I'm glad you asked. That's a huge part. That's something I've done for years and years. I mean, I not long ago had a conversation with someone I worked with like 10 years ago. And they're like, oh, I still do my market posture every week. Every week. It helps with a lot of things where there's the should I or shouldn't I, right? Should I tighten my stop, or should I take some profit on half, on less, on more? Those things, how much patience, how long trades should last, all of that really it helps. I'm aided in those decisions by this. So what I'm doing now from middle of June to July, what I'm doing now is much more aggressive, much more patient. If I take profit, I don't take as much because it's a stronger market than it was when I was back here, right? Even from now until July. So huge, just like we do in these, like every day we start with what are the futures doing? What's the economic calendar doing? It's the lawnmower, right? The more, if you don't know what I'm talking about, the quote is this: the blade of grass who doesn't bow before the lawnmower gets his head cut off. Okay. This is the Blades of Grass Club. Welcome to the club. What are we talking about? Do we stand up or do we duck? And how do we know? Well, let's study the lawnmower as consistently and as accurately as we possibly can. So, anyways, great little side discussion. Thank you. I appreciate getting into that. That's always worthwhile. And let's get back to it. What's the market doing today? That's the question. Well, it's not up as much as it was, but we're still positive mostly. So the S&P still up 0.35. The Dow was, and this is a little concerning because yesterday the Dow was just, bam, it was huge. It's like, okay. Again today, what am I seeing here? The Dow's up 0.5%. The NASDAQ only 0.19. Everything's positive. I look at the market right now as being generally overbought. We just had, depending on the stock, anywhere from 5 to 8 days of upward movement, upward momentum. So are we hitting some resistance? Are we overbought? Are we likely to maybe see a consolidation. I would think so. Possibly even here over the next Thursday, Friday, Monday, Tuesday, 4 days before and most of Wednesday before we get to the Fed. We don't have much economic news left. We have, basic weekly jobless claims. Where is it expected to be? Under 250, which means what? It means nothing. It's not more favorable because that's where it's been, but it's also not a concern because that's where it's staying. So no concern. Manufacturing survey expected to go less negative. I really don't pay attention to the Philadelphia Fed manufacturing survey, quite honestly. Existing home sales expected to drop 1 million. I mean, the whole real estate market, despite the fact that mortgage rates hit 7% again, crap, that's crazy. I don't see how I could ever leave the house that I'm in now. It's we're gonna be empty nesters, both kids off to college. It'll be my wife and I and a dog. And it's like, the basement's unfinished, but it's kind of like semi-finished. It's got like a turf floor, so you could do some training. It's got a weight room, a pool table, right? I mean, it's like 5,200 feet on 1/3 of an acre. I'm tired of mowing the lawn of 1/3 of an acre. Like, what the hell are we doing? Let's get a condo. But how could I sell the house? My mortgage rate's 2.6%. I'm just going to keep it and rent it out. I don't know, something. But yeah, 7%. And what's going on? Prices have stabilized. The inventory is just too low, right? And that's the problem. So what is our concern about real estate? None. Zero. I have zero concern. What are our concerns? Obviously, inflation, right? Employment, because that's going to be hugely that will hugely impact the amount of money coming into the market. Manufacturer sales, manufacturing. Are we building? Are we selling things? And then like we said, keeping an eye on. Yeah, that's really about it, actually, as I think about it. The impact that increased interest rates have on the financial sector, that could be interesting still. And then corporate profits. That's the last one, sorry, as we look at earnings. So going back to what we have nothing. None of this matters. Then Monday, manufacturing PMI. I mean, those aren't impactful. We do have a consumer confidence number. Consumer confidence has been pretty strong across the board. And then the last thing is interest rates. Of course, that all of these things lead to our most important consideration. I think it's Martine. I hope I'm saying the name correctly. Martine said interest rates. Well, yes, because right now, all of those are the factors that the Fed is looking at and weighing in order to make their decision. What do they want to do? We know that the general consensus amongst the Fed is to have 2 more rate hikes. We have 4 meetings left. We're halfway through the year. 4 meetings left, the first of which is next Tuesday, reporting on Wednesday. After that, we have 3 more. What are their intentions? Generally speaking, their intentions are to raise twice more. In what order? And is that a guarantee? Well, I mean, gosh, PPI, CPI numbers came back great. Even sales came back for me. So let me see if I can pull this up on the Merc. I believe that we're at 98%. I'm going to send this out to everybody in case you want this link. I'm going to send this to everyone. Boom, there's your link. Interest rates. What are we expecting? 99.8% probability of a hike. I mean, it is like the market considers it a done deal. It's priced in. Now, I've said this before. I miss the good old days. of my good friend Alan Greenspan. Savage. Loved watching him give press conference or give Senate and congressional testimony meetings, right, where they ask him and they all want to ask politically based questions. He would chew them up and spit them out. We haven't really had a guy who gives us surprises like we used to. And I look at this and think, man, if it were me, I would probably leave it alone because I've still got 3 more meetings to raise it twice more if I want to. Inflation's come down. Look at the sales numbers. Almost perfect. They're still growing at 0.2, but down from what they were and down from what they forecasted. Obviously, sales numbers have to come down in order for inflation to come down. If our retail sales stayed strong, how do we possibly think prices are going to come down? It won't. The Fed's trying to find that sweet spot where they're like, okay, can we leave it here for a while? Will this get us back towards? Because if they push it too hard, you if you've ever golfed, if you hit that putt too hard, you're right past the hole, then you're on the rough on the other side. That's not helpful. They're trying to find that right amount of pace to just sort of nail it. I don't know. If I were weighing in, and I'll send Jer Bear a text and give him my opinion. I don't know if he'll take that into consideration. Why not? Nothing has shown up that would be like, oh man, they've got to do it and they've got to do it now. It wasn't like the inflation numbers stalled. They're still coming down at a pretty good pace where it's like, yeah, do we need to nudge it or is it already doing what it's supposed to? However, this is a pretty accurate tool, and at 99.8% priced in, it seems like we're going to get it. So then maybe my thought is we get a hike in July, and then we get a little bit of a break again. They give it a rest. And then if they're going to do it, it's going to be the second to last meeting and then nothing. I think they're done. When would they then start to lower those rates? I can't see it in the first half of 2024. I think that's where we're going to live for a little while. So anyway, that's the right discussion for us to have. So that's what we're talking about. We've got earnings until the Fed. After the Fed, we've got GDP. We've got some other things, spending, income spending, PCE. But at that point, we've already seen it. The Fed's already done it. Now we've got 6 more weeks. So let's look. I'm a little behind. I got yapping a little bit. Let's hurry and get to the model. The model is absolutely bullish on the SPY. I would say calling for a consolidation. The model says it may just be a sideways consolidation. Yeah. But I think that we could easily see, obviously, a bit of a downward regression here. But I am definitely looking for that. Yes, I will hit the quiz. Let me rattle through these. The funny thing is, even if we do the quiz with 30 minutes left versus 40 minutes left, doesn't change much. Now, here, the Qs, it's looking to only see. However, my thought is if we get a bit of consolidation and this turns, it's going to whip the tail up and we're going to see more like this. I'm okay with this right here. Like I said, I do believe the market is overbought. The projection is a little bit more pronounced than I would expect, but it's still in line. There's nothing here that looks bearish. That's a consolidative move, not a bearish move. Small caps have had a little bit extra strength. The model says we're likely to continue to see that. And the Dow, again, the Dow may be a little too strong. The Dow actually, the model does have more of a 2 to 3 day pullback, more of a flag type consolidation before the next move. This looks bullish. Stella agrees. Bullish here, bullish on my posture. What about here? Well, we said we've been using this much more effectively this year, particularly since early March when we really saw our our posture transition. And then again, here we saw a little bit of a stall, but it accelerated at the middle to the latter half of May. For this move, I've been a 4 or 5 the whole time. And we said there's a good chance we get a pullback and then a bounce, because we typically see a pullback with a strong bounce into the latter part of July. I think we could see that, and I still think this could be one more pullback. Now, it doesn't tend to be a big bounce, but I think that we could easily see a bigger one. Then I definitely am concerned about this sideways to slightly down. It kind of grinds it out a little bit. But as we get to October, fall to Christmas rally, why not? Everything is coming up bullish. Why not? Why are we so convinced that we need to be afraid of a recession? I'm not seeing it. If things change, I will be water. I will adapt. I have mechanisms in that market posture that are built to go in. Are we going to trade earnings today? Like you're thinking an iron condor on something that's reporting earnings? That is definitely one of Vlad's specialties. I will do those same kinds of trades. I'm open to it. We haven't seen huge reactions yet. They've been pretty muted. Like when we look at the earnings preseason tends to be financials. Citi got beat up a little bit. JP Morgan, relatively flat. Actually, it's gone bullish since then. Flat on the initial reaction, but then it rallied. Wells Fargo, flat, then rallied. So a lot of that has started one way and has started to rally. Here's the thing, though, and this is where my concern is. The iron condor trade works phenomenally well because it is a Vega negative trade. Vega negative, meaning we make money when volatility drops. In order for us to make good money when volatility drops, then where would we need that implied volatility to be as a starting point? Well, if we want it to drop, we want it to start high. Well, if you look at the Wells Fargo, it started at 31, which was very near the low of the range. And it did drop by like 3 points and then got one back. And it's really, from earnings until now, it's only down about 4 points. My general rule of thumb, I don't know if Vlad has one or not for this type of a trade. My general rule of thumb is I want at least 10 to 12 points of potential volatility decline. So if you have one that you think is a valid candidate, give it to me and we can explore it for sure. I'm a little more leery of this strategy because implied volatility is all about expectations. What are the expectations right now? Not high. Okay, let's get I think I've been through everything. No, the map. Tesla and Netflix. Good enough. We'll use those. What does the map tell us? Technology, mostly Microsoft, semiconductors. Those are down a bit. Software is okay. Semiconductors, not great today. So, okay. What does that mean? Semiconductors coming down means it's setting up for the next trade. That's what it means. Financials look pretty good overall. Consumer cyclical looks pretty good overall. Communication services is a bit mixed. Verizon, AT&T both look strong. Industrials is mixed. Defensive strong. Healthcare strong. Utilities strong. I don't love seeing utilities strong like that, quite honestly. Okay. Let's get the quiz. Financials have been good. So for me, in the initial round of bullishness, the sectors I had identified as leading the way were first and foremost, 1 and 2, technology, communication services. For a while there, it was like, oh, this is so narrow. There's only 7 companies. If you take those 7 companies out, it doesn't look as good. And they were right for a minute. Of course, that's how it's going to happen. I mean, have they not seen when we start into a new move? That's how it happens. Somebody has to lead the way, and it's not going to be some little penny stock like, all right, get on my back, let's go. Of course, it's going to be Apple and Microsoft and Amazon and Netflix and Google. And of course, those are going to be the ones. The question is, does the rest of the market catch on? Well, then all of a sudden we had consumer cyclicals. Boom. Now it's moved out of technology into consumer. And then all of a sudden industrials. And we're like, hey, we're building things. That's great. And now it's at financials. Oh, we're financing things. It's fantastic. 5 sectors in growth and leadership positions. So that's broad. This is a broad. That's added to the strength of how I assess the market, is that breadth. It looks good. And I believe if you look at XLI and XLU, we added these. Industrials came first back here. What made us do it? Well, you can see. You can trace it back. Here's the consolidation. We broke out. Then what? Higher, low. Bam. Added. That's simple. That's simple. Now, if we look at XLF, it was a little, I mean, it kind of did the same. Not as strong, but it was there. So they both kind of joined at the same time. It had more of an aggressive breakout, but they both have done well. And they're both in a situation that you should have financials and industrials on your watch list and should be looking to trade them. Holy cow, is it taking me long enough to get to the quiz? That is completely my fault. Let's do it. It's still valid. It's a pretty flat day. We'll see what it looks like. Hold on. Okay, we're going to go right across the top. If you want to be an A, it's got to get back above 456. And I'm going to go right across this little consolidation here. We'll call it 455.40. Okay. A, B, C. Above 456, below 455.40. Those are the parameters. Give it to me. Okay. Oof, LK's like C. Look at the sellers coming in hard. Yeah, the last 15 minutes, the sellers are, ooh, they don't like something. What's going on? Holy cow. Imagine if I would have done the quiz earlier. It would have been a very different quiz. Randall's not convinced. He thinks, yeah, we'll bounce back. Still 25 minutes. It's going to subside. That's actually the way I was leaning too. I'm going to join you as a B. I thought, you know what? It's good. Yeah, they're selling. I think it's going to stabilize in Martine's a B. Nope. Still taking answers. As long as we don't break through the bottom of this consolidation, which we touched, I think we're going to just bounce right back up and settle around 455.75. That's me. John's an A. He says buyers are coming in. Love it. Love it. Let's see what Stella is. Anyone else who wants to get their answer in, let me know. Let's go back to SPY. And dun dun dun. Let's go to intraday. And Stella says we are going to end 4 o'clock 455.32. 455.32. That's down in this range. Oh, Stella's a C. Stella's a C. All right. Yeah, you can kind of see we had those three candles, but here on the third one, all of a sudden, it's turning into a shadow. The buyers are fighting back. Okay, is that it? Everybody's in that wants to be in? Fabulous. Let's keep going. Let's hit the watch list, and then let's look at a potential earnings trade. In fact, maybe we'll go there first. Oh, look at that. Turn it into a hammer. We'll see. We'll see. Okay, so let's start with the two that were proposed. Tesla. Oh, Tesla. Now, here's the first thing. You are looking at a neutral trade in the face of earnings. Can be a big catalyst. The last time we got down 190, 180, 180. No, let's see. Where were we? We ended around 185. No, we ended around 180. And we got down to 163. That's 17 points. That was about a 10% drop right there on earnings. And you'll notice that volatility dropped from 65 to 55 and then down to 52. So 10 to 12 points of volatility drop. But on this side over here, we went from 144 to 160, 10% up. So if I am trying to account for the possibility of being 10 up or 10 down, I basically need to be around, I would say, 325 on one side and 270 on the other side. Let's just take a quick peek. Did Vlad trade one of these today? Anybody know? Netflix? Yeah, it can move. It can move. No. Oh, see, he's probably a little leery too, just simply from what we have going on. So I said for the put spread, we'll go 470 by 465. We'll go 5 points wide. On the upside, we got to get up there, right? 325, we said? 325? Wait, what am I doing here? Oh, sorry, I'm on. No, that's my bad. We'll come back to this. That's Netflix. I'm like, these numbers are off. That's why. that's on me. That's me. That's my fault. That's my fault. I'm still going to go 5 wide, I think, here. Let's go 270 by 265. And then let's go sell the 325 by 330, something like that. Let's just see what that does. 325 by 330. It's not a huge credit. Why does it look like that? Something is amiss. Did I turn it into a bull call spread? I did. 320. That's better. Okay. Now, what does this give us? This gives us from 268 to 326. And that gives us about 10% to either side. $1.27 credit. We've got 3 days left. Earnings, you can see that you're going to get a lot of money from time and a little bit of money from volatility. That's what it would look like, something along these lines. You know what? Let's just, I'm going to throw a couple of contracts on. Let's see if that fills. And then let's look at the other one. I know sometimes it's hard to have a sense of what do we look like? What are we looking for on something like that? And Netflix, same kind of thing. What's hard is you're buying into it's so inflated. So it's like, I don't know. This one back here, aftermarket, we went from 315 to, that was about 25 points, 7-8%. Over here, we dropped not as much. However, we've never had we're very overextended. This is a tough one. Honestly, I think I would hesitate to trade into this. We could end up at 450 down here. It'll be interesting to see what happens with these. Let's go to the watch list. Hopefully that helps give you a sense of how those trades work. What are we looking for? We're looking for it to stay flat, the volatility to bleed off, and shut it down for 50 to 70% of the profits on the first day, and then you're done. If it doesn't do that, you carry it one more day to see if it does. And then you have like an eject button consideration where if it makes too big of a move, you've got to decide at what point do I shut this thing down, right? All right, the watch list. Apple. Well, I'll tell you what, Apple got a bit crazy there for a minute. It's come back down. But still bullish overall. I took that trade. I don't know if anyone else took this trade, but it gave a nice little signal back here. It's moving. It's making money. Looks pretty good. Can we get in now? Of course not. We're late. We're already 1, 2, 3, 4, 5, 6 days in. We're saying 6 to 7 days is all we're looking for. So right now, I would expect, for the most part, you're in bullish trades that you're hopefully have started taking some profits on. You're thinking of taking some profits on. You're starting to scale out, but still willing to carry some of these. Can I show that Tesla trade one more time? That's it right there. Only to July. That's Friday. It's a 265, 270 bull put spread, 325, 330 bear call spread. My range is between 270 and 325. That's a 55-point range in between the short strikes. Well, $27 or $290 stock, 58 is 20%. So I'm pretty close to having a full 20% range on that thing. And I do have it if you consider not my short strikes, but my break-even points. So if that helps. Okay. Now, AI. AI gave a new trade signal yesterday, but it's lacking a bit of follow through today. We'll see what happens. Still viable. I took it. If you're in it, that was Tesla. That was the Tesla, the Iron Condor. AMAT. I didn't love the way that this hit a same high. I didn't love this candle. However, all is forgiven. All is forgiven on a higher low. If this comes back to 140, settles in and turns, all is forgiven. Me and Applied Materials can be best friends again. I'll trade it, and we'll have a jolly good time together. That's what I'm looking for to want to trade that thing. Anything other than that, I'm just going to watch and wait. Amazon. It's viable. I don't love it because we're kind of right up against overbought territory. We moved up. We hit a new high. We consolidated for a couple of days, and we're bouncing out of it. That's viable as a new entry. I'm curious what Stella thinks about. Let's start with Apple. I think there's still some legs. Stella says, maybe. I say AI looks pretty good. Stella says, maybe again. I like Amazon. Stella says she agrees. Look at that. Beautiful. Beautiful projection on Amazon. Okay, there you go. AXP. You got earnings. I didn't take this one. I think it would have been considered valid. You had a pullback. It turned. That would have been a valid signal. You would have got one day and then nothing. I like MasterCard and Visa better. They're both very close to earnings, so we'll see. BLDR, that was a beautiful trade. Anyone in that one? That's been on our watch list out of industrials. Great entry signal right back here. I took half off on Friday. And then I'm like, oh, but the rest of it's coming off now. Beautiful. Now what? I take it off. I wait for the consolidation. 1, 2, 3, 4, 5, 3 to 5 days of consolidation. 1, 2, 3, 4, 5. That puts me at the 26th. Earnings are on August 2nd before market. 26th. So I would have 1, 2, 3, 4, 5 days. Okay. 5 or 6 days, depending on when I get a signal. I still think I could squeeze one more trade in before earnings. Let's see what happens. It's not there yet. Another industrial. I was like, oh, I'm so glad I picked the one. And then it caught up very quickly. I'd trade this one, and this one doesn't have earnings consideration for another little bit. As we all know, nothing runs like a deer. There's another industrial doing well. That was tough. If anyone took that trade and stayed, I didn't take deer. And I'm glad I didn't, because that bearish engulfing would have shook me out, and then I would have just been pissed off when it turned around and went the other way. I know you guys know what I'm talking about. Did anyone take this one? Question number 1. Question number 2, did you stay in through that bearish engulfing? That was a big, nasty bearish engulfing. The volume wasn't terrible. I remember we talked about the volume was not huge, but it was like, ugh. All right. Doesn't look like anyone did. Look at the Dow. This kind of showing that industrials are moving pretty well right now. IBM. No, what was I just looking at? Dow. Oh, here we go. DKNG. That's another one that we saw that looked good right here coming out of this consolidation. Nice move up over 4 days. Next 4 days sideways. It's at resistance. We're done here. Wait for it to pull back. Plenty of time to get another trade in before earnings. Flex. I took this one. It didn't last long. It's moving again. At this point, I think I've said this in this room before, that I don't love one-day consolidations like that. To me, this is still one move. And this is one move. Because that one day, if it gave me 2, maybe. So now what am I waiting for? I'm waiting for it to consolidate and trade. The problem is you're probably not going to have time for that. So I'm going to just keep watching and waiting. Gold, I was willing to trade it. If it pulled back, it just didn't pull back. Right? IBM, we looked at for a second. Let's get back to it. I don't love it. IWM. Yeah. Not much there. I mean, earnings are today. So we'll see what happens there. Jets. Not retail, consumer discretionary. That was valid halfway through yesterday. Even by the end of yesterday. Hopefully, remember we talked about entering when it exceeds the prior day high. That would have put your entry around 21.5. It's gotten some move. It looks pretty good. So, yeah, that looks pretty good. JP Morgan, overextended. Need to wait for a consolidation. MasterCard. Traded it. Got a few good days. Now it's consolidating. Definitely looking for another shot at that one. Here is Meta. Meta's a grinder. I can't do anything with that right now. I'm going to wait to see if after earnings it looks a little bit better. Microsoft. Come on, Microsoft. I like Microsoft. I've traded it a few times. It doesn't look great when it got a little sideways, but now it's broken out. The problem is I don't think there's time for a consolidation and another trade. So we'll have to see how earnings impacts that. Here's Netflix reporting earnings. Not much there. Nvidia overextended, needs to pull back. I want chips to pull back. Absolutely. That's what I'm looking for. Pulte overextend. Another great trade though, right? We saw this thing line up. We saw this thing line up out of the consolidation and give us a signal. It's made a great move. Now it's hitting some resistance. Looking for this now to make a little bit of a pullback. I feel like the watch list has been strong. The watch list has been pretty good, pretty accurate. So yeah, I'm confident with the watch list that we have right now. PLTR overextended, needs a pullback. QQQ overextended, needs a pullback. Are we seeing a theme? I believe we are. RCL, that looks viable from a signal. It's not moving yet, but that doesn't mean it's not going to. My thought on something like this: turn it into a momentum trade. You could wait and get one white momentum candle, and then put your stop below that, and then try to let it run. That's what I'm likely going to do with this. Is wait for that. SMCI finally maybe pulling back a little bit. Same thing. Well, I caught a great one here, and I thought, man, I did well, and then I closed pretty much all of it and watched it continue advancing. Sometimes you eat the bear, and sometimes the bear eats you. That time, if it's only an opportunity cost bear, I can live with that. I'm okay with that. SPY still finishing with a bullish day, but where are we? It looks like we're actually very close. We stabilized. We got in there for a minute. 455.40. So as of right now, we're hovering right at the level. Are we going to get the last 5 minutes of buying to push us back into the B range? That is, in fact, the question that we are looking to answer. And in the meantime, Tesla, gone a little negative. UPS, I like UPS. UPS, I would say that's a valid signal. We gotta move up. Started to pull back, and it's turning again. Valid. Industrials looking strong right now. Upstart, UPST, looks very strong. There's no trade for me here yet, though. I need to be patient. Visa. Oh, look at Visa. Visa actually looks closer than MasterCard. I'd be willing to change horses. I'm not in the stream yet. I'm on the side. I'd go to Visa rather than MasterCard. This looks a little bit stronger. A little bit more prospect here. The VIX. Now, you might be thinking, oh, Scott, is that a higher low? It's not. It's the same low. It's the same low we've had. In order for this to give me a higher low, here's what I would need to see. Has to come up. It doesn't have to get at or above the old one. I mean, it could come back down here, but if it does this, that is my concern. That's when I'm like, whoa, something's happening here. Right now, the VIX is low. It's staying low. We had a little bit of a hiccup, right? Well, that hiccup was reflected, right? From July 2nd to July 9th, I dropped the VIX score 1/2 a point. I reflected that, but it's stabilized again. So I'm like, I'm okay. The market's okay. There's no reason for us to panic. We're not panickers here. We are not panickers. We're men and women of action. Yes, indeed. Wayfair. overextended. Good trade. I didn't love how much volatility there was around this signal. I didn't take that one. So, okay. What are we going to do? Look for the next one. SPY, were there any C's? Yes. LK was a C. Riding alone. Hoping for a extremely coveted solo gold medal. We'll see. Wells Fargo. I mean, the financials look great, but financials, just like a lot of the technology, a lot of the industrials, we need a pullback. So here's the way I see it. Is this a trading window? No, it's not going to be a trading window if the SPY is overbought. Are we bullish enough that I would trade bullish trades outside of the window? Yes, absolutely. Am I going to load up a full portfolio of them? No, but am I willing to put some on? A handful of bullish trades, even if the window of the S&P is not conducive to what we tend to look for. Absolutely. That's my thought process. Overall, I do want to see a pullback. I do want to see a true trading window establish itself. We'll see what happens. XLE, energy, a little more bullish than I would like. Financials, still bullish. Industrials, still very bullish. XLP. So I said I'm a bit defensive, or not defensive. I'm a bit concerned about defensive based on a little bit of flow into the Dow. It's still sideways on XLP. If I see XLP breakout, that's an issue. If I see utilities breakout, that's an issue. But overall, these are still very much just kind of churning sideways, very neutral here. If it breaks and does this, that's defensive. I'd be concerned. Let's see if I can leave those lines and do XLU the same way. Ooh, it's pretty close. It's pretty close. This is about where it should be. This could go a little bit lower. Overall, that's the sideways. As long as it stays under that, I don't think there's defensiveness brewing, and I think the market can continue on the path that it's on. That's my story. I'm sticking to it. 18 seconds left. Let's erase these drawings. Let's go back to SPY. We are going to declare a true end of market winner. It's going to come down to the wire. Let's get to the 5. And there's the closing bell, closing price, 455.20. Oh, we dropped right at the end. Congratulations, LK, solo gold medal. It's good to see everybody. I got to run. I'll see you Friday morning, coffee in hand, ready to discuss any changes, any disruptors, any earnings that have had a significant impact, and we will go from there. It's good to see you all. Have a wonderful rest of your day. Have a wonderful Thursday. See you Friday. And as always, happy trading.